European stocks, Chinese stocks, and commodities are all crashing. Are U.S. stocks next? Economic collapse on theeventchronicle.com, July 8, 2015. A global stock market crash has begun. European stocks are crashing, Chinese stocks are crashing, and commodities are crashing. And guess what? All of those things happened before U.S. stocks crashed in the fall of 2008, too. In so many ways, it seems like we are watching a replay of the financial crisis of 2008, but this time around, the world is in far worse shape financially. Global debt levels are at an all-time high. The $75 trillion global shadow banking system could implode at any time. And there are hundreds of trillions of dollars in derivatives that threaten to wipe out major banks all over the planet. The last major worldwide financial crash was almost 7 years ago, and very little has been done since that time to prepare for the next one. If global markets do not calm down, we could see carnage in the months ahead that is absolutely unprecedented. For months, European authorities have been promising us that a Grexit is already priced into the markets and that any contagion from the Greek crisis will be contained. Of course, everyone knew that was just a smokescreen. Just in the past couple of days since the Greek no vote, European stocks have already been crashing. The following comes from ZeroHedge.com. Excerpt: Does this look contained to you? Portugal, Spain, and Italy all collapsing. As I mentioned at the top of this article, European stocks started crashing well before U.S. stocks started crashing during the last financial crisis. If you doubt this, just look at this chart and this chart and this chart. Will the same thing happen again this time? And just like I have warned repeatedly, European bond yields have started to soar. When bond yields go up, bond prices go down. So many bond investors are losing a tremendous amount of money right now. Here is more from Zero Hedge. Who's next? European bond risk is anything but contained as 10-year yields top 18%. If there is not a last-minute deal between Greece and her creditors, what we have witnessed so far in the bond markets will just be the tip of the iceberg. In the months ahead, we could witness a bond crash unlike anything that we have ever seen in all of history. Just consider what Egon von Greyerz recently told Eric King. Excerpt: There is no liquidity in this market, and this is where we will soon see a problem. We will see the bond market totally seizing up in the next few months. Eric, people simply don't understand that this is much bigger problem than Greece. So we are talking about a worldwide problem, not just a Greek problem. The majority of the $100 trillion bond market is worthless. And of course, a ticking time bomb of over $1 quadrillion worth of derivatives is linked to that. This means that, sadly, we are heading into a major contagion that will lead to financial catastrophe for the world. This will also lead to an implosion of all bubble assets across the globe. There is that word, derivatives, again. It is funny how that keeps popping up. All things unravel. As things unravel over in Europe, a lot of desperate Europeans are feverishly purchasing physical gold. The following comes from Bloomberg. Excerpt: European investors are increasing purchases of gold. Meanwhile, Chinese stocks have continued to fall. Overall, Chinese stocks have fallen 27% since the peak, and a whopping $3.2 trillion of paper wealth has been wiped out in China in just the last 3 weeks. At this point, things are so bad that about 1/4 of all stocks in China have already suspended trading, according to CNN. Excerpt: The turmoil in China's stock market is so bad that some companies are calling it quits. Over 700 Chinese companies have halted trading to self-preserve, according to the state media. That means about 1/4 of the companies listed on China's two big exchanges, the Shanghai and Shenzhen, are no longer trading. Desperate measures are being employed to try to stop the stock market crash in China. For example, over the weekend, an alliance of securities brokerages pledged to invest, quote, at least 120 billion yuan in order to stabilize stock prices. Excerpt: China's top 21 securities brokerages said on Saturday they would collectively invest at least 120 billion yuan, $19.3 billion, to help stabilize the country's stock markets after a slump of nearly 30% since mid-June. In addition, 57 Chinese mutual funds are reportedly investing 2.2 billion won in stock funds. The Chinese central bank has gotten involved as well. In fact, the People's Bank of China has taken the dramatic step of actually directly loaning money to brokerages. Excerpt. In an extraordinary move, the People's Bank of China has begun lending money to investors to buy shares in the flailing market. The Wall Street Journal reports this, quote, liquidity assistance will be provided to the regulator-owned China Securities Finance Corp., which will lend the money to brokerages, which will in turn lend to investors. The dramatic intervention marks the first time funds from the central bank have been directed anywhere other than the banks, signaling serious concern from authorities about the crisis. In addition, the Chinese government has taken the following steps to intervene. Get this. All short selling of stocks has been banned. China's Social Security Fund has been banned from selling stocks, but they can continue to buy stocks. Only in communist China, folks. Local media has been banned from using the terms equity disaster and rescue the market in their news report. Again, only in communist China. But despite everything you just read, Chinese stocks have still been falling. Meanwhile, global commodity prices are crashing. Just check out this chart. There is also something that happened. It's also something that happened before U.S. stocks crashed back in 2008. Thankfully, U.S. stocks have not started crashing yet, but it should be noted that the smart money in the United States has been selling stocks like crazy since the no vote and the Greek referendum. And if the patterns that we witnessed 7 years ago hold up, it is just a matter of time before we experience a stock market crash too. Incredibly, there are a lot of people out there that very strongly believe that everything is going to be just fine. They have tremendous faith in the central bankers and in our political leaders, and they are assuring all the rest of us that there is no possible way that the global financial system could be brought down again. I truly wish that they were right. If everything was going to be just fine, instead of writing about the coming economic collapse, I could write about sports or do a blog dedicated to lolcats. But of course, the truth is that the hoptimists are dead wrong. A great shaking is coming to our world, and life as we know it is about to change in a major way. Economic collapse. Did the U.S. try to crash China's market because BRICS launched the new development bank? July 13, 2015. The tide is changing. The world is no longer dominated by the U.S., Western Europe, and Japan. The Group of 8, G8, which reverted to the Group of 7, G7 in 2014, has been displaced by the BRICS, which is why Russia was not bothered when it was expelled from the G8, G7 talk shop by the U.S., Germany, Japan, Canada, Britain, France, and Italy. Global research on theeventchronicle.com. Across the globe, businesses and governments anticipate the normalization of trade with Iran, with or without a final nuclear agreement between Tehran and the permanent 5+1, or the EU 3+3. The BRICS has begun to institutionalize itself and move beyond the stage of being a coordinating forum for Brazil, Russia, India, China, and South Africa. China's New Silk Road has gained traction, while the Eurasian Economic Union, EEU, became a reality in January 2015. Plus, after 15 years, the Shanghai Cooperation Organization, SCO, is expanding. Eurasia is integrating and forming the nucleus of an alternative and rival world order. This has the policymakers in the Washington Beltway worried. While they prevented Ukraine from joining the EU, the U.S. and its allies did everything to undermine and mock the EEU when it was launched by Armenia, Belarus, Kazakhstan, and Russia. Despite this, even before the Eurasian Economic Union's first birthday, the EEU has made headway. It has already started the process of establishing free trade zones with Vietnam, Egypt, India, Iran, and South America's Southern Common Market, Mercosur. Mercosur consists of Argentina, Brazil, Paraguay, Uruguay, and Venezuela. Nor has the U.S. succeeded in isolating Cuba, Iran, Syria, or Russia. Washington has failed to bring about regime change in Syria, and U.S. officials have had to sit down at the negotiating table with both the Iranians and the Cubans. Instead, the U.S. has been isolating itself. Under Russian chairmanship, both the 7th BRICS summit and the 15th SCO Head of State Summit overlapped in Ufa, the capital of Russia's Bashkortostan. They were held in Bashkortostan, respectively, from July 8 to 9 and from July 9 to 10, 2015. Not only did Ufa demonstrate Russia was nowhere near isolated, Bashkortostan's capital became the launching point of a rival world order. Shanghai Cooperation Organization expansion. The SCO initiated the process of expanding by accepting the September 2014 applications of South Asia's two major powers, India and Pakistan, for full membership. If one considers Uzbekistan as founding member of the SCO in 2001, as the SCO and all its members officially do. This is the SCO's first round of expansion. If one, however, does not consider 2001 as the founding date of the organization and looks at the founding of the Shanghai Five, without Uzbekistan in 1996 as the birth of the SCO, then this will be the Eurasian Organization's second round of expansion. While it was agreed that the SCO summit in Ufa that India and Pakistan will become full Shanghai Cooperation Organization members in 2016, the status of Belarus was upgraded in Ufa to an SCO observer member from that of an SCO dialogue partner. Minsk now joins the ranks of Afghanistan, Iran, and Mongolia as an SCO observer member. Belarus will probably eventually become a full member of the Shanghai Cooperation Organization in the future. Iran's bid for a full membership status was also taken up at the SCO summit in Bashkortostan. Tehran has long requested that its status be upgraded to that of full member. Once the UN sanctions on Iran are dropped after a final nuclear agreement is reached between the P5+1 and the Iranians, Tehran will follow in the footsteps of New Delhi and Islamabad by starting the SCO accession process. New partners were additionally accepted into the Shanghai Cooperation Organization at the SCO's summit in Ufa. Armenia, the Republic of Azerbaijan, Cambodia, and Nepal were all accepted as new dialogue partners. They now join the ranks of Turkey and Sri Lanka as SCO dialogue partners. Membership in the SCO is being widely sought as the Eurasian Organization gains more importance and prominence. The Sri Lankans have given notice to the SCO that they wish to upgrade their status in the Eurasian Organization. Countries like Bangladesh, Egypt, Syria, and the Maldives have asked to join the SCO in different capacities. Egypt applied to become an SCO dialogue partner on June 2, 2015. The Chinese dragon and the Russian bear forge a community of destiny. What Russia and China are doing is forging an alternative world order through the SCO, Eurasian Economic Union, and BRICS. All three bodies were brought together in Ufa. Russia is the common denominator in all three bodies, while China is also a common denominator in the SCO and BRICS. The appealing Chinese concept of a community of destiny that includes the People's Republic, which was officially adopted by the National Congress of the Communist Party of China in 2007, is budding with the BRICS, SCO, EEU, and New Silk Road. Chinese officials have been promoting this concept for a few years, but it took on new life in Bashkortostan during the Ufa summit, hosted by the Russian federal government. Community of destiny, no pun intended, is the term that the policy mandarins in Beijing use to imply a special relationship of common prosperity between China and other countries, and it is materializing with the special relationship that China has with Russia and the other countries that gathered in Ufa. Washington, however, is refusing to accept the rise of Beijing and the community of destiny that has shown itself in Ufa, nor has the U.S. shown any signs that it wants to be a part of the community of destiny. The policymakers in the Washington Beltway refuse to see the writing on the wall and are standing firm in their refusal to accept the emergence of a new reality that is unraveling the architecture of the global order. U.S. officials and policy elites will continue to push the wrong policies and approach until their ship sinks. And instead of accepting consensus and a system of global governments, Washington is doing everything it can to destabilize, divide, and destroy the Silk World Order that China and Russia are promoting. The U.S. position is leading the world towards conflict. Washington attacks the Chinese stock market. The financial architecture of the world is being altered too. The U.S. dollar is gradually being neutralized as a U.S. weapon, while the monopoly of Washington's Bretton Woods system, formed by the International Monetary Fund, IMF, and World Bank, is being directly challenged by the BRICS New Development Bank, NDB, and China's Asian Infrastructure Investment Bank, AIIB. China, Russia, and a coalition of other countries are declawing the U.S. by weakening its ability to manipulate currency values and the world's financial markets. The SCO is not only expanding. The SCO and an entire series of countries and international organizations that are primarily located in Eurasia and Latin America are ditching the U.S. dollar in bilateral and multilateral trade. Venezuela, Cuba, Argentina, Uruguay, Sri Lanka, Turkey, Belarus, Armenia, Kazakhstan, the Socialist Republic of Vietnam, and the Democratic People's Republic of Korea are among these countries. Aside from the SCO, the Bolivarian Alliance for the Peoples of Our America, ALBA, BRICS, Mercosur, and the Eurasian Economic Union are the organizations and groups that are replacing the U.S. dollar in trade. As a response, the economic war that the U.S. has been waging appears to have taken a new turn as well, using speculation of an economic decline in China as a psychological weapon and market manipulation. Washington's reaction to the steps taken by Beijing and Moscow to curb U.S. influence and the U.S. dollar appears to have led to the launching of a financial attack on the Chinese stock market. The aim of the attack was to hurt investor confidence in the Chinese economy and to ignite divestment through massive sell-offs. The Chinese have blamed the U.S., while the U.S. Treasury Department has rejected any responsibility whatsoever. Both are true. Beijing's reaction to the attempts to crash the Chinese stock market has been to calmly step in with regulations that restrict investor withdrawals. Both the Chinese Security Regulatory Commission and the Chinese police are launched criminal investigations. The U.S. wants to obstruct the pivotal role the Chinese play in financing a major banking infrastructure and development projects that challenge Washington's global influence. The crashing of the Chinese stock market is aimed at initiating panic among investors. Ultimately, the move is primed to undermine the economic vigor of the People's Republic, with the goal of crippling the New Silk Road and Beijing's project to create an alternative world order with Russia and their BRICS, SCO, and EEU partners. Article was originally published by the Strategic Culture Foundation.